Right, the closing bell is fast approaching on Wall Street, but first we're looking at how to navigate the big picture with the Yahoo Finance playbook. As Bitcoin hits another all-time high, how much further the asset can climb is a hot investor debate. For a look at how to play it, we're joined by Dan Dolev, Mizuho America's Senior Financial Technology Analyst, and Matt Ballensweig, BitGo Managing Director, Head of Go Network. Dan, let me get over to you, because you've been covering these stocks for a long time, Coinbase, Robinhood, you name it, whatever it is. What are you telling investors at this moment?
Stay away. Stay away as much as you can.
Why?
It's in my view, it's still like I don't see the reason for people to. Let's talk about Coinbase specifically, right? They're a take rate business, and take rates are always bound to be kind of a race to the bottom. And eventually, there's going to be more competition, and they're already giving out pricing concessions. So in January they gave out a pricing concession for people who are trading 500,000 or above. So pricing pressure is starting, and competition is heating up. So I think the fact that I don't believe in the underlying currency, Bitcoin, that's one thing. But irrespective of that, I think Coinbase is that minus take rate pressure and competition.
And I just want to quickly follow to you, Dan, and before we get to Matt, because you do have, as I understand it, if I'm not outdated, a buy rating on Block, which obviously is a much different business, but also there is a crypto tie-in there. So is your buy rating sort of irrespective of the crypto side of that?
Actually, you're making like probably one of the best points ever. So
I didn't even know.
This is like a genius comment, because I'm old enough to remember that back in 2017 and 2018, and even 2019, the reason Block or Square at that time was performing so strongly was because of the correlation with Bitcoin in the last cycle. And guess what? It broke. And the correlation doesn't exist anymore. Does that tell you anything about Coinbase? It probably does. But on Square specifically, Bitcoin is like single digit part of the revenue. I mean, 95% of the revenue has nothing to do with Bitcoin. And that's the reason I'm bullish on it. But by the way, same thing for Robinhood. I'm super bulled up on Robinhood, but not because of crypto, because of everything else, because of what they're doing in retirement, because of their growth in Europe, because of the leadership in equities and taking share from Charles Schwab. So this, Bitcoin and crypto is the least important stuff in my view.
Now, let me get you in here, because nothing goes up in a straight line. And if investors are getting a little worried about this move in Bitcoin, how fast it has come on, are there certain warning signs they need to be on the lookout for that there might be a pause in the cards?
I mean, you're seeing it right now. Yeah, sorry. Oh, sorry. I thought it was a question.
Yeah, that one for you,
Go
Matt.
ahead. Sorry.
Yeah, no, I think, look, I think you have to view this a lot bigger than any one specific company or any one, pullback or drawdown. This is a global shift in the way people think about portfolio construction. I think Pandora's box is now open entirely. Anybody can buy Bitcoin through their brokerage account. Institutions are starting to pile in through the 9 new Bitcoin ETFs. And the flows really don't lie here. There is demand for BTC as an asset. BlackRock through the IBIT ETF did $2 billion in volume yesterday. In total, the ETFs now hold over $55 billion in just their first 60 days of trading. So the flows really don't lie here. And even more importantly than just some of these short-term metrics around demand is you have two of the largest asset managers in the world in Fidelity and BlackRock. These are multi-trillion-dollar assets that have so much clout and weight on the market and can really drive what institutions do and how they think about their portfolios, endorsing Bitcoin. Fidelity the other day, put out basically 3 different core portfolio structures, all which recommended crypto as a percent of that portfolio. This has dramatic implications on how hedge funds, asset managers, the whole RIA market thinks about utilizing crypto in portfolios. And to me, this is just the early innings of that transition. So I do think, sure, could there be pullback, and if things get too hot? Definitely. I think we've yet to see retail really pile in as though they have in previous cycles. So as funding rates start to become more expensive, as folks require more and more leverage, that will put pressure on the market. And I'm sure at some point we will have a pullback. But I think zooming out, this is really a generational shift in the way that crypto is going to be viewed institutionally and at the retail level.
Matt, what is the best way for investors to get involved if they want to buy Bitcoin? What are the relative merits of buying it through one of these ETFs versus investing in Bitcoin itself?
Yeah, I think, look, it's gotten a lot easier to get exposure to crypto and Bitcoin over the last few years. I think the floodgates are now open because it's extremely easy through the ETFs. So, there's a few ways. Obviously, folks need to consider, one, just the cost of, some of the ETFs, that are in existence. These can be as expensive as 1.5% if you're talking about Grayscale, or as cheap as 12 bips, if you're talking about some of the others. Other things that need to be considered are, who's the counterparty, right? Like, who's actually holding the underlying Bitcoin here? And if you look at, ETFs like BlackRock and Fidelity, a lot of them are using Coinbase. BitGo is also another custodian that's starting to win some of the custody deals for a lot of the ETFs. BitGo obviously is a state chartered trust entity in both South Dakota and New York. So you do have to kind of look at the underlying, who's my risk to. But I do think, other ways to get exposure outside of this, the ETFs, are buying spot crypto yourself through one of the platforms out there. That could be BitGo, it could be Coinbase, it could be some of the other exchanges like Kraken or Fidelity. And then obviously investors can think about other things, whether it's, buying volatility, utilizing options or other derivative contracts such as futures. And then obviously there are other public equity proxies out there as well. Obviously Coinbase stock and MicroStrategy, or some of the minor companies like Hut 8 and Marathon. So there are now a host of different ways to take exposure to the space. But I think investors really just need to think about the actual volatility of the asset, the counterparty risk of who they're facing and the platform they're holding those assets on, and then what are the fees and costs associated with getting that exposure. So I would advise any investor to just kind of do their diligence in that sense.